Welcome back. You're watching Indian Open right here on BloombergQuint Live. Asia as a pocket is looking weak yet again. You've got Japan, which is lower by about 1.5%, and so is the Hang Seng. As the death toll increases in China, we've got it now at about 170 deaths on the back of the coronavirus. So as investors start to grapple with this, it's going to see its impact for some time, at least on the Asian equity markets. And we'll have to wait and watch to see what happens on Monday when China actually opens up for trade, when the Shanghai Composite opens up for trade. For SGX Nifty today, you've got a marginal dip of about 25 odd points, 12,107 for the Indian markets.
Yeah, well, this is probably the only talking point right now. Yes, though it's an important one because it's an important next few days, as we said, because a lot of other points happening. BOE may cut rates today, US Q4 GDP and all of that, but the coronavirus scare, the biggest overhang right now. And suffice to say, not a good one.
Yeah, and then the budget on Saturday, which is going to be the big one too to watch out for. But all that coming up later. Let's also take a look at the here and now, which is the expiry of the January series, which happens today. And what's the setup ahead of that? Navneet is joining us to tell us. Navneet, good morning.
Good morning to both of you. It's an important day for us as the monthly expiry takes place. And the first expiry of this new year, it went in favor of the broader markets because the mid-cap index was up nearly about 8 to 8.5%, where you had Nifty just about flat. Nifty Bank is down 3.5% so far, at least for the series. And what happened yesterday, of course, there was a rebound after a correction that was seen in the previous two sessions. Yesterday's rally was on account of short covering across the series. For Nifty futures, at least, open interest was down about 1%. Rollovers picked up, stood at about 45%. And for Nifty Bank, just marginal uptick in open interest for across the series, all the three monthly series. So open interest there went up by about 1%. And I think Bank Nifty closed at the lowest level to 30,877. The other positive factor was volatility cooled off yesterday, 16.5. It was down about by nearly 0.5%. And we highlighted yesterday how the PCR had fallen below the mark of 1, which is an important level to monitor. So put writing came back into the system and the PCR went above that mark, 1.13 versus previous closing of 0.99. In terms of distribution now, for today's expiry, 12,000 put and 12,200 call are the key strikes to watch out for, because that's where the maximum open interest is. And what happened yesterday, as I mentioned, there was more of put writing. As you can see, 12,100 put added nearly 7 lakh shares, and call writers of that strike ran for cover. We closed above that mark, but two strikes which were really active was 12,150 call and 12,150 put. You combine the premium of both, it's giving you 70 points. So the range that you should watch out for today should be 12,060 to about 12,200 on the upside, which also happens to be the 20-day moving average. Moving ahead then, in terms of individual stock futures, a lot of stocks were moving around, maybe on back of earnings as well. Of course, Pidilite reacts to its numbers, but it went in strong to the earnings. Fresh long positions were seen. You had Bajaj Finance posting stellar set of numbers. Long positions were seen here as well. Aisha was your top loser on Nifty. It was down about 4%. Shorting was seen on the futures side. And a poor set of numbers coming in from Ramco Cement. That was also down. FIs have been selling for last 3 sessions in the cash market. And some positive data points, at least from the futures and options front. On the index futures, they build up more long positions. Even on the index side, index option side, there was more put writing, which came in. Nearly 11,000 contracts were added there. And even some contracts were added on the call long side, telling you maybe just going into the expiry, long positions were seen. With that, it's back to you guys.
All right, Navneet, thanks very much for that. Lots of stocks to discuss. Parthiv Shah, director at TRACOM Stockbroker, is joining us right now on the show. Parth, thanks very much for taking out the time. The big one of yesterday was Bajaj Finance, 5% on the stock. This one doesn't fail to surprise you with regards to, even though the update on the AUM disappointed the street and you saw the stock correcting post that, these results with a controlled asset quality deterioration seem to have impressed the street. Do you feel there's more upside left here?
Good morning, Devina. See, Devina, what is extraordinary about this company is, even before the results, they came out and did warn about a couple of things in terms of the updates of their upcoming results. One was regarding the consumer durable loans, which in this quarter, what we saw was slightly tepid at 7% growth year on year, vis-a-vis the last quarter when they grew at 19%. And many people consider this to be one of the core businesses of Bajaj Finance, but they more than enough recouped this problem area with great growth in terms of the mortgages, which came at 45% growth year on year, and auto loans. Surprisingly, auto loans, when we are talking about auto slowdown, Bajaj Finance has garnered a huge auto loan market share, growing at 51% year on year. And that's the key reason why the AUM growth of 35%, which looks stellar at a current scenario, I think really justifies what Bajaj Finance does in terms of its stock price and its valuations. They've raised fantastic amount of money at huge premium valuations of 4,000 rupees a share, which was at around 8.5 price to book multiple. And now that they have the capital cushioning, no doubt, I think one slight miss was in terms of slightly elevated credit costs. But nonetheless, I think this is a company which with such growth trends, even at such a scenario of the economy, and assuming that the consumer loan segment is going to come back, so the EOM growth might even look better. I think what we are envisaging, this is quoting at FY21 6.5 price to book multiple, which I think certainly the street would justify not being very, very expensive for such a growth company. And certainly Bajaj Finance puts a lot of banks to shame in terms of how well it has scaled up its business and how well it is still continuing to grow. And we are very confident on this story going ahead.
Okay, that's Bajaj Finance. 44.19 now on the stock price. Had it just reached levels of closer to 4,000 post the update, so even I think sub
39.15 or thereabouts.
Yeah, it had slipped there, and then from there another 400 points built up on the back of its results. So really good going on the one.
Really good going for this one. Good going, Parthiv. I thought for some couple of consumption names as well. What did you make of Pidilite's numbers?
See, I think stellar set of numbers, especially operationally, Neeraj. And look at the gross margin expansion. I think that was stellar. We talk about companies, especially like Pidilite, who are also consumer-centric and in the branded space, struggling to show great volume growth since the last quarter. And here's what we see is that they still have that pricing power. And the gross margin expansion, thanks to a lot of raw material input costs, which had gone lower, and especially with the credit of very credible management like that of Pidilite in terms of how they share their product mix in terms of the selling aspect. I think they've really done a stellar job in terms of really beating the street hollow in terms of their operational performance. No doubt we are still expecting a couple of more quarters to be little tepid in terms of the volume growth. So I think till the volume growth is back, I think Pidilite has justified its very elevated 60 times trail PE multiples by a stellar performance in the bottom line through the gross margin and the EBITDA margin expansion. So I think such companies should not be avoided or thought about taking profits into just because 1 or 2 quarters are bad because of the consumer slowdown. I think these are kind of seems like perpetual hold, at least for the next 5 years. And looking at its market share, despite all the competition coming in from likes of Asian Paints or Estral, I think Pidilite in the adhesive segment is still going to be a market leader for a very long period of time.
Okay. Stay on with us, Parthiv. Lots more to discuss with you. Also getting a sense of what to watch out for today from our research team. You've got a slew of numbers aside from the big ones that we just discussed. Bajaj Finserv, Tata Power, CG, all of these reporting numbers, some more stocks in news as well as a few previews coming today. But Nikki, let me start off with you first on some stocks in news.
Sure, actually a bunch of them. I'm going to start off with a negative bit, which is Interglobe Aviation, where the shareholders have voted against the co-founder Rakesh Gangwal proposal to ease the rules on selling stake in the company. Essentially, there was, the proposal was to amend the company's article of association, which could have provided him a clean exit if he so desired amid the escalating feud with the partner. The special resolution EGM received 51.4% vote opposing it and 48.6% in the favor of it. We're also looking at Hindustan Aeronautics, where the government would be selling up to 15% stake in the company via an offer for sale. Also looking at Mega Money Organics, where there is a demerger proposal there. It's going to be restructuring its business by demerging 2 separate entities, 2 separate units, that's the agrochemical business and the pigment business, into a wholly owned subsidiary which would be listed on the exchanges through mirror shareholding structure. And last on the list, we're looking at MOIL, where the company has received an environmental clearance for enhancing the capacity from 90,000 TPA to 203,000 TPA for that matter.
All right, Nikki, thanks very much for that. Darshan, let's talk about some results.
Yeah, so a couple of them. First of all, Bajaj Finserv. Now, majority of their value comes in from Bajaj Finance, which already reported strong set of numbers. But there are 2 aspects. One of them disappointed, and that was the general insurance, in which the net income was down. The life insurance business did well. So overall, pretty decent set of numbers, but all dependent on Bajaj Finance. The other one is Tata Power, very weak set of numbers. Revenues down 11%, EBITDA down 4%. Net profit was up 26% because of a deferred tax write-back that has happened this time around. Losses at the Mundra power plant, lower demand and lower FOB coal prices that dragged the top line for the company. CG Consumer, inline set of numbers, revenues up 4%, EBITDA up 8%, profit double. Now the ECD segment did extremely well, 11% growth that came in on strong performance of the consumer durable division. The lighting product probably didn't do well. There was a lot of price erosion that happened, so that was rather weak. And profit was up almost 2 times given the fact that there was a tax write-back that happened. Questcorp, very good set of numbers, revenues up 36%, EBITDA up 51%. Profit up 15%. Lower expenses aided the margins for the company. Individually, their workforce management revenues were up 50%. Operating asset management was up 4%, and technical services was up 19%. So, and they managed to reduce the intercompany loans also. And finally, weak set of numbers from IDFC First Bank. 5th quarter in a row that reported a weak set of number or a loss. And the core operating business in the 3rd quarter was also extremely weak because of higher credit costs this time around. Asset quality also deteriorated slightly, but overall it's a weak set of number.
All right, and Somit, Bharti Infratel.
Well, a muted set of numbers are expected compared to last quarter. Now, Bharti Infratel's revenues are expected to be flat. The EBITDA is expected to be higher by nearly 1.1%. EBITDA margins are expected to come in at 52.1%, while the net profit is expected to decline by nearly 18% to close to 791 crore rupees. Tenancy ratio is expected to be flat at 1.85 times. Now, this is the biggest net profit fall for Bharti Infratel in the last 12 quarters, and that is because of the normalization of the tax rates. Now, in the 2nd quarter, the company had adopted the lower tax rate, because of which there was some deferred tax reversal, and that's the reason we are seeing this fall in the net profit number. Now, the revenues are expected to be flat, as higher energy revenue and net tenancy addition will be partially offset by revenue loss and past tenancy exits. Now, the company will also continue to get nearly 90 crore rupees for in the revenue part from tenancy cancellations. Now, higher energy margins are expected to actually boost the company's EBITDA margins, because in the 2nd quarter the energy margins were negative. But do remember that energy business is not the core business of Bharti Infratel, so the core operating revenues and EBITDA are expected to be weak sequentially. Lastly, key things to watch out for from Bharti Infratel earnings. Firstly, any management commentary on the Indus Tower merger. Along with this, any management commentary on the impact because of the adverse AGR ruling, gross tenancy addition and net tenancy cancellations would be important to watch out for, and any updates on inorganic or organic fiber rollout plans would be important to watch out for from Bharti Infratel earnings today.
All right, guys, thanks very much for that. So a slew of stocks to keep in mind before we set up the trade this morning. Parthiv, I want just to come to you on the numbers posted by Jubilant FoodWorks. Seems to still growth is in line with street expectations, but in a tough environment, they've managed to do well in terms of store additions as well. And Westlab Development too. Do you feel that it's time to focus more on this pocket?
Devina, for me, the key highlight was, despite the fact that the dairy inflation rose by almost 200 basis points, and we know cheese is one of the key elements in pizzas, and despite that, the gross margin contracted by just like 40 basis points, 40 to 60 basis points is what I read. So I think that is a fantastic job in terms of how well they've managed their costs. And that, I think, definitely percolates lower into the EBITDA margins. SSG at 5.9% certainly is looking really good in terms of the very high base that they come with. And what we really liked is, starting from Q3, we did witness store expansion. And we know that I think Street is always excited when Jubilant Foods starts talking about store expansion rather than store rationalization, because till date they've tried to squeeze in a lot from the existing stores. And with store expansion also, we get a lot of visibility in terms of the future growth. So things are looking really good. Again, a similar story where despite very, very steep valuations, I think market is willing to pay a premium for the trend of out of home food eating trend, where I think Jubilant Food is extremely well placed.
Keep in mind, the base is favorable for the next 3 or 4 quarters as well, as I read in a note, because of same-store sales growth.
4 to 6%.
Yeah, 4 to 6%, and therefore that will also probably aid. Add to that the fact that the space itself seems to be doing well, because I think the Westlife's same-store sales growth numbers also at 9.5 was pretty strong. So you have the space arguably doing well. Let's wait and watch if there is excitement around this. The Burger King IPO only adds to the zing in the pocket. One more quick question before we get to our technical experts. Parthiv, you've largely been sanguine about IDFC First Bank, maybe with reason. But my counter question to you is, it's the 5th straight quarter wherein IDFC First Bank has posted a loss. And every time there is a genuine reason, yes, but there is a reason why the bank fails to meet any kind of estimates. Why bet on something like IDFC First Bank? Instead, why not go for the tried and tested?
You're absolutely right, Neeraj. I think, again, a big disappointment. And again, knowing the fact that the legacy issue that they carry from IDFC Bank, I think it's going totally wrong for the entire consolidated bank, despite the fact that they're doing extremely well in growing their CASA. Overall, I think they're trying to increase the share of the retail book, which has certainly been a huge rise as compared to what they inherited from. So it's still this turnaround in terms of shaping up for a very good run bank is still going to take at least like a year. The reason why we are still wanting to believe in this story is definitely the man, Mr. Vaidyanathan. I think it's slightly unfortunate that what legacy issue that he's inherited. And I think, again, they've talked about the fact that they are not totally writing off this big provisioning that they've done in the telecom carrier, because then it's an entire 1.20 lakh crore worth of loan book for a lot of other banks as well. It's like a very cautious provisioning. But purely based on the current valuations and the growth potential that they envisage over the next 3 to 5 years in terms of the retail book, which can easily touch 1 lakh crore vis-a-vis the current book of 54,000 crore. I think that gives us a confidence that whenever that cleanup takes place, I think certainly we'll see a lot of re-rating. So again, as we had always mentioned in the past, this is more of a 3 to 5 year story. Yes, there'll be such accidents in many other quarters going ahead. But I think if one wants to write that off, certainly I think next 3 to 5 years could be a lot better.
Okay. Well, IDFC First Bank and would leave a few people disappointed. It may not correct too much, so don't quite know, probably should, but the point being, when other banks and other NBFCs are doing so well and gaining, why do you want to be parked in a name like this? 1 month returns minus 2%. I think the 1 year returns too for IDFC First Bank leave a lot to be desired, to be honest. Look at that. 12 months, minus 1.5%. Look at just an HDFC Bank, forget anything else. A large behemoth like HDFC Bank has given you better returns over the last 1 year. So it was a simple bet, 21%. For HDFC Bank, why would you want to bet on something like this? Anyways, maybe it will turn the corner sometime. Let's focus a bit on the technicals as well. Parthiv, stay on. So much more to talk about. Brijesh Singh, Senior Technical Analyst at StockAxis, joins us right now on the show. Brijesh, good having you. Thanks for joining in. What's your thought, Brijesh, today on the markets? Would you take a trade on the Nifty or the Nifty Bank?
Good morning, Neeraj. If I talk about Nifty specifically, then nothing much has been there. It's been trading in the range downside 12,000 psychological, outside 12,020 is a support, whereas on the higher side has been concerned 12,220 to 12,240 has been a resistance. And it looked like there is in today's session or in coming days, since a big event has been there, the budget event, there might be a volatility, but that volatility would be very sharp. To capture that volatility, better to be stay away, because your stop loss on the either side both would be getting triggered. Whereas the Bank Nifty has been concerned 30,600 is the important support, whereas on the higher side has been concerned 31,150 to 31,200 is the immediate base of resistance. So regarding with the Bank Nifty has been concerned, one can go on a sell side at the present rate or any rise till 30,900 with the strict stop loss of 31,150 and play for the target of 30,600. But it looked like this time we might break the level of 30,600 and we might another say 200 to 300 points of correction can be seen in it. So Nifty I would be aware, but Bank Nifty definitely one can look out to go on a sell side with a strict stop loss 31,150.
What about individual stocks, Brijesh?
Two stocks, both on the buy sides. Number one, Pidilite. Yesterday we have seen Bajaj as well as the Pidilites. When the day was been closed, they closed on a day high, whereas the Pidilite was been concerned, it has made the new 50-week high. So present rate or any dip till 1505 can be used to go long and in with the strict stop loss of 1485 and play for the target of 1540. And second counter on the buy side is Escort. If we check it out, the charts, the higher tops and higher bottom formation on the shorter term time frame of the chart indicates the probability of more upside. So somewhere around 753 or below, if able to get, then definitely one can look out to buy with a strict stop loss of 738 and play for the target of 775. Time frame to hold the counter would be 2 to 3 trading session.
Okay. Let's talk about Bajaj Finance. After its big move yesterday, Brijesh, what would you do on the stock at 4,400?
See, definitely, if I look over the Bajaj Finance, the hourly chart indicates the volume breakout has been there, so do the price breakout has been there. So, if aggressive trading has been concerned, then I would be suggesting 4300, also 4290 is a support which should not be broken. Looking the present scenario, present rate on any dip till 4400 can be used to go long with for the target of 4575 to 4600. But ideally for a short-term investment is been concerned, then for 4040 to 4050 is a nice support. So I would be waiting if it corrects to 4200, then keeping that thing as a stop of the 4040. Then I'll look for the target of 4800 or even 5000. But purely for a swing-based trading has been concerned, I would be suggesting 4290 should be your stop loss. Pay for the target of 4550.
Yeah, that's the interesting bit, isn't it? This is what expensive looks like. The expensive stock gains 35% in 6 months, and when that 1 quarter slight disappointment had happened 2 or 3 quarters ago, and the stock had corrected from 3400 to 3050 or 3100. From there, it's actually given you nearly 28 to 30% returns. So that's quite stunning, really, for a stock of this size. Last 12 months. 70% uptick for Bajaj Finance.
Yeah, but it's very difficult, Neeraj, because at a time when the stock falls and it's already at that, even at that price, an expensive stock, you question whether or not it could come off further or no, and whether things have actually turned around for the stock for the worse or no, and whether it can pick up from there. I mean, Bajaj Finance did its bit. It did pick up from there, but it's very difficult to time such things and figure out whether or not 3,000 was a good price to enter at, or you would have waited for it to come sub 3,000.
Which is why you can't time it, right? You can't 2,000, 3,000 or 2,000 during the Island Fest crisis. You can't time these things. So with quality machines or quality franchisees, just probably stay on.
I guess it's like how some of them say, if you have a price in mind that you want to enter a stock at, when the price comes, take your call and enter the stock.
Yeah, the valuation which you want to enter it. Yeah, perfectly fine. In fact, speaking of Bajaj Finance, Bloomberg Edge today, Yash Upadhyay is also focusing on that because the Bloomberg terminal has thrown up a pattern on Bajaj Finance. Yash, what is the terminal telling us today?
Morning, Neeraj. So the terminal is also indicating a buy signal on Bajaj Finance, and the indicator that we are using over here is the MACD indicator. The MACD, as you know, is a trend following momentum indicator, and it basically shows you the relationship between the two moving averages. How do you interpret it? You go long when the MACD line crosses above the signal line, and you go short when the MACD line crosses below the signal line. Now, in the case of Bajaj Finance, what we've seen is that as far as the price action is also concerned, we've seen a big breakout in yesterday's day of trade. Obviously, it came on the back of strong results, but the MACD indicator in the lower panel, that too has given a positive divergence. So the blue line, which is the MACD line, that has crossed above the signal line to give that positive divergence. But not just that, it has managed to break out from what is called an ascending triangle pattern on the daily time frame. Now, there are two parts to the ascending triangle pattern. Basically, there is one horizontal line, which is the resistance, where it has twice come to these marks, but has not managed to surpass that level. But it has been consistently making higher lows on the daily time frame. So it on the back of higher volumes as well, we've seen this big breakout occur in yesterday's day of trade. And for the last two trading sessions also, it has been largely positive. So the trend seems to be on the upside, the MACD indicator too suggesting to go long.
How well has this worked in the past, Yash?
Devina, 6 out of the last 8 times that the MACD indicator has suggested a positive call. On an average, the monthly closing has been closer to around 3.5 to 4%.
All right. Nonetheless, it's a big behemoth of a stock, so I can't expect returns of 8-10% like we've seen in some of the other mid-cap names. Parthiv, the other focus now shifts to the auto space with the results lined up. Bajaj Auto, for one, reports its numbers today. You're going to be watching out for what Tata Motors does. And for that matter, Eicher Motors, which has been really struggling of late. Last 1 month, 3 months, the stock's not done a whole lot much.
I think even it will be too much to expect from all these three in terms of outperformance. At the best, what these guys could do is to control their cost and show relatively better margin performance. But again, it's going to be a very, very difficult quarter because we've seen the seasonality trend, especially post the festive season. I think none of these players have shown any sort of positive traction in terms of retail sales, and that's where I think probably what I'm expecting the results might not be really good. Yes, one will be keenly watching what happens with Tata Motors in case of Jaguar Land Rover, whether they're able to sustain the momentum of the EBIT margins in terms of the improvement that they'd shown in the JLR last few quarters. I think whether that sustains or not, that will be a key monitorable. But again, in terms of Bajaj Auto, despite the fact that they've been garnering more market share, but the average realization per bike has been slowly inching lower. So I think that trend will also be monitored well. But again, I think it's going to be a little challenging for these automakers.
Yeah, well, little is probably an understatement as well. Parthiv is just being kind. These stocks have really taken the stick, especially Eicher Motors. And if indeed Tata Motors' commentary around coronavirus is negative or not positive, then it might impact that stock too. So do wait and watch. Some other companies that should be in focus today, Parthiv, do you track Make Money Organics and the corporate development that they've announced or restructuring that they've announced?
See, I think, Neeraj, now what they're trying to do is to have their agro and the pigment segment be segregated from the basic chemical, because so far, I think the past few quarters, what we have seen is the caustic chlorine division, which is the basic chemical division, has been reporting fantastic set of numbers. And despite the fact that I think they've been struggling to get valuations at par with many of their peers, even say likes of DCM, Shriram, which no doubt has many other divisions, but I think their core business is also caustic chlorine. And now I think probably what the management is trying to do is to try and kind of garner more value for the shareholders and even for themselves, because I think the market cap at which Make Money Organics is quoting at in terms of what performance they've shown so far and the capex story that they've had, I think is really at a sorry state. So I'm not very confident in terms of how this will really garner a lot of value, because in between, due to the restructuring that they had done, I think it had caused a lot of miscommunication and many felt that it was a lapse of corporate governance. And in such stories, it becomes very, very difficult to get that confidence back. And chemical as an entire pack has been doing fantastically well. So again, one will have to distinguish the quality names from the ones where I think there's such volatilities in corporate governance standards.
Yeah, well, one of the names that you like really zoomed up the last couple of days, Parthiv. Those IT raid reports brought Aarti Industries down, but the last 3 days has just seen a phenomenal move at nearly 1,000 rupees. Would you be a buyer here, Parthiv? Why or why not?
See, certainly some of the channel checks that we have done indicate the fact that all of a sudden, due to this unfortunate outbreak of coronavirus, I think a lot of chemical production in China is certainly going to get hindered. And who are going to be the beneficiaries? The beneficiaries are going to be the one who have full backward capabilities here within India, and not the chemical companies who will be dependent a lot on their raw material imports from China. So Aarti Industries is one company which is, I think, what we like in their benzene chemistry is that they're fully covered in terms of backward integration. And I think they've been doing well in the domestic market, but now with very good pricing power that they'll be getting, they might be even becoming huge exporters to countries like China. And this is what probably the market is seizing in terms of an opportunity from a domestic company which is fully backward capable. And looking at their expansion plans and the fundraising that they did during the QIP, I think Gogoris have been fantastic capital allocators, and they've been delivering stellar return on capital employed. So I think, yes, we are still very, very confident on stories like Aarti Industries.
Okay, just under a minute left to go for market pre-open. We're going to come back to both our experts in just a few moments. But I want to quickly look at the setup for this morning. SGX Nifty is still lower by about 20 odd points. That's 12,114. The rest of Asia too trades weak on the back of the coronavirus scare. Aside from that, today's session, we'll see whether or not Bajaj Finance continues to do what it did in yesterday's session. A 5% pop on that was there yesterday. Bajaj Auto ahead of numbers. What happens to that stock? That's also the other big one to watch out for. And what's been happening with Reliance Industries all these days. And HDFC Twins. These are all your heavyweights you need to keep. And a slew of other mid-cap stocks that reported numbers, the likes of Pidilite, Tata Power, all of those names out there. Bharti Infratel reports numbers today, so going to watch out for that one too. Pre-open on your screens, it's a flattish start of sorts for the Nifty 50 at 12,155, but very volatile, so won't really go by these prices at this point. Wait it out for things to settle in. Bajaj Finance seems to be yet again the top gainer, up about 3% in today's session as well. 4,500 now on Bajaj Finance in pre-open. Good going for that one. Grasim Z is the other one, 1.5% apiece, and Tata Motors, 2 ahead of numbers, is holding strong, about 1.5% higher for Tata Motors. And then you've got the likes of JSW Steel, Indian Oil, Bajaj Auto, HCL Tech at 613, Titan, Axis Bank, HDFC is up about 0.5%, L&T moves up to 1372 on that one. Slow mover of sorts, Reliance Industries at about 1485, marginally higher. SBI again struggling around 317, 318. You've got losers then. Nestle is your top loser. Britannia follows suit. BPCL and Bharti Infratel ahead of numbers is weak by about 0.5%. So that one is something you need to watch out for. Grasim is now your top gainer, up about 2%. The currency 71.4, so there's some weakness that's come about in the currency market as well. Coming to individual stocks that reported numbers and the strong set of numbers that were reported by Pidilite. Want to see how that stock's doing in the session. Tata Power reported numbers which were weaker than expectations. Pidilite is up about 3.5%. Tata Power revenues were down, EBITDA was down. The stock's not doing a whole lot much right now. CG Consumer Electricals is the other one. Quest Corp, yesterday's session was up about 3.5%. That stock is reported revenues and EBITDA increased by about 50% plus. It's up 2% again in today's session. IDFC First Bank, which was a big disappointment, 5th straight quarter in terms of losses, and the stock opened lower by about 4.5%.
Yeah, well, this seems to be the order of the day. We'll watch out for Jubilant Foodworks as well individually because of the commentary. But all of that in a bit. First, get in Shefali Malik, who joins in right now with the top brokerage calls for the day. Shefali, good morning.
Good morning, Neeraj. So, the top brokerage call is that by UBS on banks, and they've come out with interesting data points. And based on the data points, they're saying that NPA cycle is likely to extend to FY21 because of the downgrades that we've seen in last couple of months. So the corporates with debt worth 4.7% of the system loans have been downgraded to non-investment category in just 9 months of FY20 versus 4.9% in whole of FY19. So an elevated data point there. And out of all the banks that they've studied, Yes Bank, Punjab National Bank, IndusInd and Bank of Baroda have highest exposure to the downgrades, that is a debt with D rating in the past 12 months. So Yes Bank 6.4% of loans, IndusInd's 2.3%, Bank of Baroda 2.1% and Axis Bank's 2% of loans have been downgraded to the non-investment category. And they've also put out these banks' exposure to the default category. So based on this analysis, they're maintaining a sell rating on IndusInd Bank but have cut the target price from 12.10 to 11.50. On Yes Bank, they've cut the target price from 45 rupees a piece to now just 20 rupees per share. And on Bank of Baroda, they're maintaining a neutral rating and have cut the target price from 105 to just about 100 rupees now.
Wow, well, steep cuts there. UBS coming out and giving out notes which are not too conducive for these banks, some of these at least. Shefali, thanks so much for putting those into perspective. So that's UBS on banks. There's also Goldman Sachs on real estate, and they have initiated coverage on a couple of them, and that's positive notes. We'll talk about some of those. Actually, first, technically, Brijesh, would there be a trade in any of these banking names that Shefali was talking about?
Sorry, Neeraj, I didn't get it.
Which are
the banks?
The Yes Bank, Brijesh. Would you trade it?
No. I doesn't feel anything special in the Yes Bank. 38 is a downside support, followed by 43 or say 45 has been a resistance, has been hovering in this range. But whereas the trend has been concerned, it looked like any right should be used to go short. So I would be suggesting 42.5 to 43 is the ideal level to go short with the stop loss of 44 and play for the target of 38 to 39. Any closing below 40 would be giving an invitation for 36.5.
Okay. I just want to also look at MGL, IGL, Gujarat Gas and how some of these city gas distributors are doing, which have been an extremely strong pocket of late. 1227 and then you've got IGL at 510 there, marginally under, and Gujarat Gas too, which is up about 1% or so. A trade open here, Brijesh?
I'll look out for IGL. No doubt there has been a mild correction in it, but it looked like 490 and 495 band is a strong support. So presently looking yesterday's session closing at 510. So anywhere somewhere around 500 if we are able to get, then keeping a stop loss of 490, one can go on a long side for the target of 520 to 525. So just wait for a correction to come up. The ideal level as a risk reward ratio has been concerned, 500 would be the ideal level to go on a long side with a stop loss of 490 and pay for the target of 525.
Okay. Parthiv, your take on some of these city gas distributors?
We are Devina very, very positive, and I recollect our last week's discussion where we had maintained that market is willing to pay a premium valuation to companies where there is this annuity sort of a business model, where not only that annuity is growing by a higher volume growth from the existing geographies, but a lot of these CGDs have won new geographies in the previous auction, where it might take a couple of years for them to develop the infrastructure network over there, and a lot of that infrastructure network is getting developed from the current internal cash generation, which is again very enlightening. There's not going to be any sort of balance sheet expansion in terms of debt. So I think there's a good visibility over the next 5 years in terms of what sort of volume levels they can grow and maintaining the margins. And if at all, I think there are talks about natural gas coming under the ambit of GST. I think that should work well for the pricing dynamics for a lot of these players. So we are very bullish on these stories for the next 5 years.
Okay. An interesting move has happened in a couple of names. Persistent Systems went up to as high as 737, 738. It's coming out with numbers today. It's now trading at close to 695. So mid-cap IT companies by and large have delivered good numbers. I don't know if the street is worried about slight weakness from Persistent. So do watch out for this one. The numbers come out today, as I said. The other one on which there is an interesting move happening is Phoenix Mills, 868. Goldman Sachs has come out with a note. They have initiated coverage on Phoenix Mills as well as Oberoi Realty, and they have given very high target prices to both. The Phoenix target is close to 1,000. The Oberoi Realty target is close to 625. Parthiv, I think you've spoken about Phoenix in the past, but if you haven't, any thoughts here, or for that matter, even Oberoi Realty, wherein the target prices from Goldman are higher than what the current prices are?
See, these select real estate plays, Neeraj, where especially likes of Phoenix Mill has done fantastically well in how well they have distinguished their business models from likes of lot other real estate developers. And that's the key reason why market is willing to give a huge premium. And in real estate, we have seen these segregated pockets where I think the companies earn a lot of rental income and very stable set of rental income, even in a stressful time of consumer spending like what we are witnessing right now. Yet, I think in terms of the numbers that Phoenix Mill delivers, I think that is stellar. And going ahead, I think they have a few projects in hand where I think again there is a visibility of growth in terms of their revenue and bottom line. So very, very positive out there. In case of Oberoi Realty, a very similar story. I think they use a lot of their rental income to buy new land parcels, and their project quality and execution has been stellar. We have also been very positive on Godrej Properties, and that has been one of our favorite real estate stocks. So I think real estate as a whole, a lot of these organized players are going to get expanded in terms of the market cap opportunity that we are envisaging going ahead. So one will have to be selective in such pockets.
You're not surprised. I mean, if you're talking about premium being paid, I think Godrej Property is right up there, but the market believes that this stock can do no wrong. And frankly, the track record and the execution has been quite substantially, quite great for Godrej Properties. It's trading at 1100, the most expensive real estate name, but arguably with reason. I don't think too many people are nowadays baffled by higher valuations. So the higher valuations are probably there for a reason.
Well, also the fact that it's reporting its numbers on 3rd of Feb is something that probably the market is waiting to watch, because last quarter was a bummer. They had no new launches, because of which the stock price corrected almost 8 days in succession. And from there, I guess this is an interesting thing to watch out for, because if anything else for the real estate segment comes out from the budget as well, that could keep the stock active.
Yeah, so well, all of these things should be interesting. There are not too many textile stocks, but just keep in mind that the other pocket that could be active today. I'll tell you why. But first, since we are just minutes away from market open, let's tell you all that you need to know, largely amongst the big things to stay ahead in trade today. First up, a majority of Interglobe Aviation shareholders voted against co-founder Rakesh Gangwal's proposal to amend articles of the association of the company. The resolution got 51.44% votes against it.
Tata Power's third quarter missed estimates, deferred tax reversal aided the company's profit this time around.
Pidilite reported a strong quarter with a drop in the raw material costs and lower crude oil prices aiding margin expansion.
The Reserve Bank of India has imposed a fine of 1 crore rupees for HDFC Bank for non-compliance with KYC norms.
And 4 nifty companies, Indian Oil Corporation, Bajaj Auto, Tata Motors and Bharti Infratel report the third quarter results today. Now, very quickly, I was just telling you about textile. There is some benefit that used to be that textile companies used to get, which apparently has been revoked. Now, I don't know if Trident is falling 7% as a result of that. It's a small stock, but a Trident, a Welspun India, Gokaldas Exports are some of the names that you'll probably keep an eye out for. They're not essentially the best wealth creators of late, but these are names that you should monitor if indeed you are individually invested into some of those names. The one which is starting off extremely well is Pidilite. I know fundamentally it was a buy. I think technically Brijesh gave it a buy too. Brijesh, it's starting off 2.5% higher though. Would you still buy it at 15.35?
I'll revise my stop loss. Now the previous stop loss which I gave was 14.85. So suppose it's been a gap up opening or of 2.5%, 1500 or 1505 would be the ideal stop loss. And the target which I was been looking was 1540, and then I look for another target would be 1575. So keeping a stop loss of 1505, one can look out to buy at the present rate with the target of 1575.
Okay, that's pretty light for you. That Brijesh continues to like. Anything within the diagnostic space, Brijesh?
Metropolis looks good on the chart as compared to the other healthcare has been concerned. If I look at the chart, has been trading in the range of 1700 and downside is somewhere around 1625. So present rate or any dip till 1650 one can look out to for a buy with a stop loss of 1625 and play for the target of 1700. It can even try to touch 1750. So I'm just waiting for a small dip of correction 1650 around. If it trades, then one can look out to buy Metropolis.
You know, by the way, a set of numbers which came out yesterday was Escorts, and it did go up post the numbers release, and the stock is up in the session today as well, 760 and counting. So good start to the trading day. Fundamentally, Parthiv, are the problems behind Escorts, or would you wait around? Autos may not be the best place to invest in.
In case of Escorts, it seems like the worst might be behind, because we know for the fact that they've garnered some market share in the tractor segment. Though I think this quarter the tractor segment was, I think, at the best described as a neutral performer rather than very good performance. But we are very confident that in the upcoming quarters we might see a volume uptick there, thanks to the good Rabi sowing and also with the reservoir levels being good. This is the commentary in general coming from most of the industry players, and also the new products that they've launched. But I think the enlightening performance came from the railway division, where I think the EBIT margins were stellar at 18%. Not only that, I think they're getting good traction in terms of the execution there, despite the fact that the only drawdown or the problematic area was the construction equipment, which is obvious, I think, looking at the current scenario. So overall, I think quoting at 12 times FY21 forward, I think Escorts might not be a bad bet in current scenario in the auto space.
Okay, that's Escorts, and Parthiv is pretty okay with the stock right now. Not a bad bet in the current environment. Last 3 months, the stock's been moving up 14% higher. A minute left to go. Brijesh, your top call for the morning.
Pidilite. 1505 would be the stop loss play for a target of 1575. Even I have recommended Escort also. One can look at that thing with stop loss of 738, play for the target of 775. But Pidilite looks good on the chart as compared to the Escort has been concerned.
Brijesh, and just very quickly, 20 seconds, you would still initiate your short call on the bank nifty. It's starting off flat.
30,900 and above if it trades, and one can look out to go on a sell side with the strict stop loss of 31,105.
Okay, Brijesh as well as Parthiv, gentlemen, thanks so much for taking the time out and giving us your views today. Really appreciate. 18 seconds left for the markets to kickstart trade. We'll start off flattish. Keep that at the back of your mind. Though you might have some individual reactions happening in select stocks, which might help the index by and large. But otherwise, anticipated to start off on a flat note, especially for the bank nifty. The question is, can we build on from there, or will it be volatile on the expiry day? We'll figure out. For now, it's a flat start. The Bank Nifty marginally in the red, about 53 odd points. Even the Nifty and the Sensex marginally in the red. Very, very flat moves, though. You wouldn't even call it a start in the red, save for the Bank Nifty, of course. The mid cap and the small cap indices will also come up on your screen. It's a flat start. Yesterday, too, while the market breadth was positive, the headline numbers didn't do too much. And in today's session, the start is very, very flat. Let's get the heat map and see whether there is more red or more green. Actually, it's even Stevens. IndianOpen Bank and the Yes Bank, two stocks which correct the most on open because of the UBS note, I reckon. So both of them down about a couple of percentage points. Tata Steel corrects about 1.5%. JSW, Vedanta, Hindalco, and Reliance Industries, the big boy, down on the percent. Now commodities will correct because this whole scare around the coronavirus will keep the global trades under check. I will be really surprised if some of these find some bottoms very soon, unless this situation resolves itself. What is doing well, though, is the question. BPCL and IOC are up marginally in trade. Crude prices have continued to correct. HCL Technologies marginally higher. Bajaj Finance, the big winner from yesterday, up another 0.5%. But aside of that, we don't have too many big gainers, I must say. So the standout is commodities losing out today yet again, and the UBS note impact, which is telling on the banking stocks like IndianOpen Bank as well as Yes Bank. Very quickly, a couple of pockets that I want to mention before I hand it over to Devina. Stocks that would be active in today's session. Goldman Sachs initiated report with a very high target price on both Oberoi as well as Phoenix Mills, and both of them start off in the green. So that's one pocket that you need to monitor. The other pocket that you need to monitor are stocks which are going to come out with the numbers today. Dabur, Marico, and Colgate. So it's a big day for consumption releases. And ahead of that, Marico is the one which is shining. The other two lying slightly flat for now. Devina, what are you spotting?
Results reactions should pull up a Tata Power to see how that one's doing. IDFC First Bank is down about 4%, a very disappointing quarter. Again, a loss posted by the bank, and the stocks 4.5% under. You've got the likes of Aramco Cements, which is down 2.5%. Orient Cement also reporting numbers. The stock's down about 2% in the session. Tata Power is down. Godrej Consumer Products is down 2%. Then you've got the likes of Naveen Fluorine, some profit taking after the run-up that we have seen over the last few days in the stock. The likes of PI Industries, Varun Beverages is down 1.8% now. Network 18, that's the other one to watch out for. It's down in the session. Dish TV, Interglobe Aviation also down 1.3%. Make Money Organics, just pull up that one on the back of the demerger in business. The stock's up about 3% this morning. What else is gaining? You've got the likes of Crompton, which is up about 2.9%. Pidilite, strong numbers, 2.5% higher. Jubilant Foodworks also does well. Sales commentary is good. The stock's up about 2%. CCL Products, Phoenix Mills, Prestige Estates continues to do well, and walk hard at 353. Breadth is positive. Okay, it's almost at an even keel, just 50-60 stocks here and there, but it's actually tilted more towards the negative side. 584 stocks decline, 528 stocks advance, but you'd call it a flat breadth.
Yeah, flat breadth for sure. Get in an important market voice. Chakri Lokapriya, Managing Director, TCG Asset Management, joins us on the show. Chakri, good morning. Thanks so much for joining in.
Morning.
Uncertainty and volatility ahead of the budget, or would you believe because the budget largely could be a non-event, look at the crude price fall and be slightly optimistic about the near term?
Yes, I think we go through this hoopla every single year, and this year is no exception. And I think against the back, because we already had a corporate tax cut, which is kind of showing up in numbers in earnings results where they're having the benefit of the corporate tax cut. So now the government doesn't have too much headroom. Now the people are talking about LTCG or dividend distribution tax, but I don't think there's so much headroom. Yeah, LTCG might make it a difference because it never earned any revenue for the government in any case. Now, if you look at auto sector, real estate, and some of the agri-related sectors, these have been big contributors to the economy over the years. And those have kind of gone down dramatically in the last 3, 4, 5 years. So auto industry, we all know the pain. So if they do some kind of, I think there is an expectation of a GST cut, maybe they have tough.
But that would be a part of the GST Council, right? Or
that would be part of the, so I don't know why they're talking about it in the budget thing. and about real estate. So I think, and personal tax cuts. So I think at the margin, if as long as there are no new taxes for luxury goods where the multiplier effect is very high, so those will be helpful rather than anything negative.
Agreed. Yeah, but I'm just wondering, so since we don't know what the budget will throw up, should you look at the other factors, which is one, that the earnings and the consumer earnings and consumer financial earnings are looking okay, and crude prices having fallen should also at the margin aid the macro?
Indeed, and if you look at this quarter earnings, and if you look at companies across the board, their raw material costs have come down because commodity costs, and not just commodity, non-commodity raw material costs have also come down, which is showing up in the margins for these consumer companies. Now, on one hand, you have banking, which is a reflection of the macros problems. You have still high slippages, high NPA, MSME in problems, whereas individual companies have repaired their balance sheets, fixing themselves up. So at the aggregate, a bank reflects the combined problem. Individual companies is their own benefits of restructuring. So that is what will play out I think, in the broader market in days to come. Will be there sufficient opportunity to pick individual companies rather than saying banking as a sector.
Okay. For the year, what's your assessment of what the EPS could be? EPS growth.
EPS for this year is going to be a very wild card, especially for the broader market. For the larger cap, still financials will account for majority of the growth within the Nifty, that is. And outside the Nifty, you have companies like metals and autos, which will have some amount of positive contribution this year, which were not there in the last year. So taking all that into account, I think it should be roughly in the range of about 18%, 15 to 18%. The broader market can actually see a higher number than that because they were far more depressed last year. So as long as there is no new negative news, I think we will see a cyclical recovery going into FY22, not FY21.
Okay. What is the big risk that could derail this mood that we have right now? I mean, while we are seeing days of correction, the overall structure still seems to be that of investing on every dip. Do you feel that can get significantly derailed if the budget is a big disappointment, or if there's something that comes about in the US which could dampen equity market sentiments, global equity market sentiments, and therefore the amplified effect here?
Yeah, US thankfully is doing phenomenally well, including the latest numbers of unemployment and the Fed deciding to keep on hold. Now India is now a recovery story because we know all the negatives that have happened. There's increasingly, I think, a recognition in various quarters in the government that they want to do something about it. So things like, this year you have an RBI tax one-off thing which helped. Next year it'll probably be the AGR which will bail out the government. But if you're bailing out the government, you're going to bring down two big companies, and the chain effect of the telecom loans and the banking sector is going to be a thing. So I think those are the negatives, where individual policy actions like importing import duties on various components. Mind you, so India assembles a lot of stuff, electronic goods, pharmaceuticals, and then manufactures and sells it out.
Right.
So by imposing an import duty, you actually are cutting down growth because the multiplier effect on services industry is far higher. So I think those are the kind of policy mistakes, if avoided, will help in aid revenue growth and EPS growth.
What about the contract manufacturers, stocks like Dixon, Amber, which up until now have been reaping benefits of the fact that I think the last announcement was the opening up of foreign investment into contract manufacturing as a space?
Yeah, all these companies, they still import a very big chunk of their various components in assembling, in putting together an AC, in putting together various electronic items. Now, things like corona virus every once in a while come and derail that process for a quarter or two. Now, if they go ahead of the curve and say start imposing duties, which has been the talk, that is actually detrimental at the margin because there is no alternative of domestic as a source. That manufacturing will happen over time. And so for that, I think there needs to be sufficient breathing space for the services these are all semi-services companies. They're not true manufacturing companies to actually breathe in over the course of this year for them to deliver the earnings.
You know, the other bit, Chakri, is this whole thing around consumption. Almost everything, if either has had a good revenue effect, a good margin effect, or at times the volume growth numbers have looked very strong. I want to drill it down to a micro pocket. The same store sales growth led names. Jubilant Foodworks is up about 3.5%, strong showing. Westlife had a good number. We have a Burger King IPO coming up as well. Tata Coffee and the Starbucks franchise is starting to do seemingly well. Is this a large enough pocket for an institutional investor like you to bet on, or would you just avoid it?
I think this space is a very interesting, important space and an expanding space at that. All these companies, Tata Global, Jubilant Foods, Westlife, none of them are represented in the Nifty, whereas they all reflect changing consumer tastes. And these companies are growing and growing very fast now, and lots of company-specific actions. Jubilant expanding into other countries, so they can do a Jubilant 2 in those new countries. Tata Global is going to get a bunch of brands like nearly a couple of $1 billion worth of brands from Tata Chemical into Tata Global. Westlife, you know, Burger King, a good company, good. I think the IPO should do well, depending, of course, on the pricing. So I think these are important sectors. I mean, consumer is a very big sector, the biggest sector in the US, growing one in India, and I think definitely important to invest in.
Okay, my last question, Chakri. You have a very keen eye on what financials do. Would you bet on, I'm not asking you to list specific names, but I'm using them as an example, an IDFC First Bank, etc., which have issues but are available at good valuations, or an HDFC Bank and Bajaj Finance, which have no issues but are at premium valuations?
I still stick with the Bajaj Finance of the world for the simple reason that at about 5.5 times book, it still has one of the lowest cost of funds, which other NBFCs don't. So net, that eats and shows up in the margin, and therefore the multiples. So yes, on the other hand, but in the case of banks, there's far more in other companies other than the HDFC's banks at the margin, you know, beginning to, like a federal bank. These are still not out of the woods, but I would look at the broader market as far as banks are concerned.
Okay. Chakri Lokapriya, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you.
Hope we all have a great budget.
Thank you.
All right, we need to slip into a very quick break on the note that the markets are down about 0.5%. But up next, very important conversations. The gas regulators plan to open up city gas distribution networks. PNGRB member Satpal Garg joins in on the other side. And then we talk about a couple of earnings as well.